The market rockets higher all week. Is there any relief in sight for the bears? This is Invest with Jacob. Okay, guys, so I've been out for a few days battling the flu. I feel much better now, and I'm glad to be back. In our last video last week, we were hitting some heavy resistance levels, and we were looking for a potential pullback, but the market squeezed through those levels, as we talked about on Thursday's video, and up to some higher resistance zones. So now the question is there any relief in sight for the bears? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, as always, before we jump into the charts, we are going to take a look at the results of the indicator. We've had 3 gap and go days in a row, and that's kind of the enemy of the day trader. Day traders are looking for multi-directional trading, meaning highs and lows, not just one-way trading, but we still found some winning trades yesterday. So let's jump into the chart and take a look. Okay, guys, so here we are on the 5-minute SPY chart, and if you're new here, we created a trading view indicator that is a day trading and swing trading indicator. We're going to go over some day trading today. Again, we had a gap and go day the last 3 days, and in all of our training that we do, we talk about the EMA 21 on any different chart, but the 5-minute specifically for trend days to kind of identify when a trend is about to happen. And essentially what happens is you get a gap up, which we got. And then usually what happens at the beginning of the day is they come back and test the 21. So the blue line on the screen here is the 21-day moving average. Or I'm sorry, 21 5-minute exponential moving average. And the black line is VWAP. And these are going to be our 2 bellwethers as to whether we have a trend day or not. Because what happens on trend days is right at the beginning of the day, generally, not always, but generally, they're going to come back and test these levels. So you can see VWAP and the 21 were basically the same level. They tested it here, spiked below it, and then ripped higher. That's the first sign that a trend day may happen. Once you see a second hold of the 21, you generally have a trend day on your hands for most of the day. So we get a bounce off the 21 here. They come up, a bounce off the 21 here, a bounce off the 21 here. They spike below it and then trend back up to end the day. And so what you get here is you don't really get great trading opportunities because they're never going to get too far away from the 21. They're going to come back and test it. And you're just going to get these back sell opportunities because you're always in a buy cycle and you're in a gap up, so you've already missed the move. So we don't want to chase the move. So you're not going to get a lot of buy signals on these types of days. What you're going to get is counter trade sells. And most of the time we want those to be quick in and out. And our first take is always going to be the 21 in VWAP. And so you had 3 trades today. This was actually a small winner. It doesn't look like a big move on the chart, but it was big enough to give you a small winner. This was a small winner as well. And then this buy right here into the 10 o'clock hour and beyond, which is when we stopped trading for the day, was also a small winner. So we had 3 small winners on a day where the market basically was one directional. And that's just a little quick training lesson on trend days and how to understand when they are happening so that you can trade less. You really don't want to trade a lot on these types of days. You just kind of want to sit on your hands and wait for a better type of day. And usually the second hold of the 21 is a pretty strong indication that we may be in a trend day. And even though we did take this sell signal, we would expect to try to get out at the 21 or at least take a fair amount of profit here and then see if they can break down. And if they don't break down, then no harm, no foul. We still make a little tiny bit of money and the market goes up. So again, if you're new here, this is the 5-minute SPY chart. You can use this on any chart. You can use it for Apple or NVIDIA or anybody else. I highly recommend majorly traded stocks. You want liquidity. You want big movement. You don't want like a Procter & Gamble that's a dividend stock that's going to always chop. Those are really hard stocks to kind of day trade. So you are looking for highly liquid stocks that are highly traded. And you're looking for a little bit of volatility. When there's no volatility, like today, or yesterday rather, just not a great day trading day. So 3 small winners, which is still money in your pocket on a day where it really wasn't that great to trade. And then a little trading lesson on how to find a trend day and understand when that's happening so you can kind of stay away from these types of day trading days. So another winning day. Now, if you'd like to get this indicator, it is trading view only. You do need a trading view account, and you need real-time data on the ES and the NASDAQ. And the reason for that is if we take a look at the settings, it does look at what's happening on the NASDAQ and the ES as well as the SPY, and it looks for all 3 to be in sync. And if all three are in sync, you very often get moves that are stronger and more likely to be profitable and winning. And that's what we look for. So you do need the real-time data on the ES and the NQ. And if you want to get it, there's a link down in the description. Click that link. It'll take you over to the website. Once you're there, it'll take you right over to the page you need to be on. And you can get it right here. It's $59 a month. I do give a 30-day money-back guarantee. So you can try this out. You can just watch it on the chart. You don't even have to trade any dollars of your money. Put it on your chart and see if you like it. If after 30 days you think it's stupid, send me an email and say, hey, this didn't work out for me. It's not for me. And I'll refund you the $59. Or you're going to love it, which I think will more likely be the case, as we've had very few people get their money back because it works so well. And you'll want to keep it and keep going forward. So 30-day money-back guarantee on both the yearly, if you want to take a shot at getting a discount, and the monthly. And you can scroll down and just see what everybody's saying about it, because it's really helping traders understand the market, and it really makes trading super simple. And that's really what I'm looking for, is to help people not have to look at 100 moving indicators that moving averages and different indicators that are all late to the party. So ours is based on price action, and theirs are all based on things that have already happened. So ours is forward looking, theirs is backwards looking, which is why we can get in at tops and bottoms. So I'd love to see you get the indicator and check it out. I think you're going to love it. You can get it right here. Now let's jump into the charts and take a look. Okay, guys, so here we are on the 1 hour futures chart for the S&P 500. And there's so many misconceptions about Elliott Wave Theory and how it works and what's going on. First would be that everything has to be textbook, and that's just not the case. Of course, we're going to tell you what the textbook form is, what we're expecting, because that happens more often than not. However, if everything was textbook, why would we need anything other than the textbook and we would all trade and be billionaires? That's just not the way the market works. So what you have to understand is how Elliott Wave works. And how Elliott Wave works is when you're in a diagonal, which we're in now, you have ABC patterns. And what you'd typically look for in the textbook here is you'd look for an ABC of A, then a B, then a C to get this circle A. That's what you'd look for in a textbook pattern. However, and you'll see that on the NASDAQ, by the way. However, they didn't do that. They gave us the extended C wave. And if you know anything about Elliott Wave, you know that wave Cs and wave 3s can extend, and they can extend quite far. So this is not an abnormal pattern or anything that's shocking. It's just something we're looking for. And I want to further say that what I say on these videos isn't trading advice, nor do we trade everything we talk about on these videos. These videos are a snapshot in time, and we just talk about what we expect. We trade setups, and setups are completely different than what I talk about on these videos. And what I mean by that is, if you were looking to short this market on the way up, you needed a setup. There's been no setup. So what you would look for is you'd look for an A, a B, a C. Okay, we got that. Everything looks good so far, right? They came to this peak and pulled back a little bit. Then you need a setup. You need an A and a B down that holds, and then the start to the move down. We never got that. Okay, so when they start the move down, this is when you would enter short, with this being your stop. Once you break this low, you feel really good that you're going to get the C wave down. Then you take your profit and then wait for the next waves to come. Again, on this move down here, should this happen, let's say this did happen, this is just a quick hypothetical, we wouldn't get long until we saw a move up, a move down that held, and then another start to a move up, so we can start to trade the move up. We have a stop point here, and once we break out over this high, that's a pretty good indication we're going to be like this. So just because we say we're looking for a pullback doesn't mean we're short the market. That's an insane view of the market. That's an insane way to trade. We are looking at price action. We are looking at Elliott Wave. The reason we're looking at this area, I have a line drawn here as a major resistance zone because there's this big resistance here and here that failed. So most of the time you get rejection there. Did we get rejection there? Absolutely. Did they reject in a bigger wave? No, they just rejected a small, and then they blew right through it. They squeezed them. Right? And then they came up a little higher. They gave us a rejection where? Right off of this peak where we would expect it. Was it a big enough rejection to set up anything? No, because you never got the bounce and the move down again. So there's no setups here. It's just a move up that you're sitting on your hands, or we were long down here and we took a nice profit on the way up. But in the overall scheme of things, you have to understand what a setup is versus what Elliott Wave is versus what this video is. This video is a snapshot in time. What happens overnight is completely different. What happens in the morning is completely different. And what we trade is completely different than what happens in this video. In this video, I'm giving you the potential paths. In my trading rooms, we talk about targets. We talk about setups. We talk about when and where we're going to get in the market should we get the setup. But if we don't, we just sit there and watch and wait for the next setup. Because if you want to jump in here long, well, you're chasing. You're coming right into a very strong resistance zone, and you can get smacked down. That's a terrible place to enter. If they squeeze through here, I could have given you getting long here, but I wasn't going to chase the market up. My point being, just because we talk about a pullback doesn't mean we're short the market or we're going to short the market. In fact, I would much rather wait. I'm looking for a pullback here. We'll get into that in a second. I would much rather wait for this 1.5%, 2% pullback for the 6% move up. I'm looking for the move up, not the pullback. And the reason for that is pullbacks are generally choppy and hard to trade. They're a lot like this, and then you get this move down finally. So I want to trade the more consistent move, which is the trend, which is the bull. So let's talk about where we're at. Right now we have a direct move up in A, circle A, and circle A was always here. We were always looking for this target for circle A. Why are we looking for that target? Because this is the last high, and this is the consolidation zone, and this is all of the resistance on the chart. Can they move directly higher up here to 6,300? Yes. Is that the most common path? No, it is not. The most common path is to reject and pull back. Now, we do have a very strong bull trend, so I'd expect a little bit of a shallower pullback, probably about the 6,000 range or so. And then from there, we would look for this C wave back up to 6,300, potentially 6,350, 6,400, depending on how deep this pullback is. But that's what we'd be looking for, and that's where we're looking to get in. This heavy support back here at 6,017 to 6,000, that'd be my target for this pullback, and then higher in C. So when you're looking at the market and you're thinking about Elliott Wave, don't think about every move as a trade, because it's not. We don't want to trade corrective waves very often. We want to trade moves where we're getting a C wave set up, and that's what we are looking for here as well. We're looking for this B wave pullback and a C wave setup, this time to the upside, because we are dealing in diagonals. Now this move up would be what we consider circle wave 5 here, and then from there we'll see what kind of pullback we get, as this could end up being a potential major market top. Now, is it going to be a major market top? I don't know. I don't know if it is, and I don't care if it is. I'm just telling you it has the potential to be that, and if it breaks support, then we will talk about that being a major market top. But if it doesn't, pressure remains up, the bulls remain in charge, and we still look higher. So yes, I'm still looking for a major correction, a major correction. When it happens, it'll be because we broke support, not because of anything else. It'll be we broke down, we got the pattern we're looking for that broke support, and then we're looking for a much bigger move. I said as soon as this broke down, it was very likely to get bought, and we were headed to 6,300, all the way back over here. When they said the market's over, I said 6,300. And there was a whole bunch of people that said I was crazy and the bears were in control and the market was over. Here we are back up at 60 at the all-time highs, essentially. And I believe that it will be a pullback and a breakthrough. Again, can they break through directly? Yes. Is that the most likely scenario? No. Now, is there an alternate where they do break down and this is it? Yeah, it would be a flat. So you'd have an A down, a B up, and a C down into this blue box area, and a bigger flat. Is that a likely scenario? No, this would be too big of a wave 4 in my opinion. So I don't think that's a very likely outcome here. I do think the most likely outcome is the B wave down and then the C wave up. But again, we'll trade the setups when they come. Over on the NASDAQ. Now, on the NASDAQ, we got exactly what we talked about. We got a textbook move up. And that's really important to understand. You got an A, a B, and a C for A. Then you got a B wave down. And then you got a C wave up for circle A. So you got an ABC of A, a bigger B wave and a bigger C wave to complete circle A, right back near the all-time highs. They're lagging a little bit on the SPX, but they're also at a major resistance zone right here. This B wave top is major resistance. They've already rejected it a couple days ago and come back up. So we'll see if they can continue the rejection. Again, when you have a strong C wave like you did right here, it's very possible that you get a shallower B wave pullback. I would expect 21.5 or so to be really good support for this pullback. And then we'd look for that C wave up to that 23,000 level we've been talking about for quite a while. And I would expect that to be where they head after that. Again, can they push directly higher? Yes, they can definitely push through here and squeeze up to the highs. And then they can take this A wave up to here and pull back off the all-time highs and then go back up. That can be a possibility as well. And that's really just simply price action trading right there. They're coming back up to a major resistance level. They pull back off of that level because there's still sellers there, and then they push back through that level. So pretty simple stuff. And again, we only trade setups. We don't trade everything I talk about. We trade what we see, and we trade what makes sense. So NASDAQ's going to be the same thing. We would expect a pullback off of this area, again, that 21,540 or so down to 21,400 would be where I'd kind of look for major support. This is going to be major support at 21,380. I don't expect them to get much below that, if at all. We'd look for that kind of pullback, and then again, continuation to 23,000 plus from there. Can they pull back in a bigger flat? Yeah, they can. I mean, that certainly is a possibility for this to be a larger B wave, and C. Do I think that's likely? I don't. But if we get a impulsive move to the downside, that would be what we look for, a corrective move down, and we're going to look for new highs. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans. They both come with a 7-day free trial because I want you to get in there, become part of our trading team, make sure you love it, get all the updates you need so that you can trade the setups. And we do that, by the way, on every stock on my midday call at 10 o'clock Pacific Standard Time. I have an hour call where we go through about every chart you can, and I give you all the setups that are there. We also have our training material, which is our Elliott Wave for Beginners and Elliott Wave Advanced course. These courses are helping traders understand these setups, understand the market, understand how Elliott Wave works so that they can make effective trades as well. Now, in the advanced course, we're talking about all of the things that we're talking about right now, and those things are things like advanced fib levels, like extended C waves, for example, diagonals, which is what we've been in for a while. They're very ugly and awful. They're hard to trade and they're hard to find, but we've been doing a pretty good job of nailing them. And then we talk about double and triple threes, flats, triangles, and then trading Elliott Wave. This module right here tells you what to look for a setup and how to trade effectively. It's very important, and I think it's probably worth the entire cost of the course, just this module. Now, if this is too much for you, and you can see that our traders are loving it, by the way, but if this is too much or you're just getting started, we have our Elliott Wave for Beginners course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It can be so confusing when good news makes the market go down and bad news makes the market go up, and that's because Elliott knew that the news cycles are garbage long ago and that key levels matter. And what happens when those key levels break? You get a squeeze. And what happens when they hold? You get a reversal. So those are what's important to trade. Now, this course is 25 videos. We go through the introduction. You got to have an introduction to it because you've never seen it or you're new to it. And we go through how it works, your mindset, the KISS method, all that kind of stuff. We go through the chart setup and tools, all the tools you need with Elliott Wave. This 21 EMA is everything I talked about in the indicator setup. Really great video, just that one right there. But all of these are really good videos to understand help you understand the market. And we also have our Elliott Wave for Beginners area where I go through each of the waves, how they work, what they look like, the corrective depth theory, the pivot, the theory of alternation, everything you want to know to make sense of an irrational market. Now, the really cool thing about these videos is if you want to get them at a bundle, we have them for $37 off, and you can get both videos at the same time. But if you want to just get them for free, simply join one of our monthly rooms, as those training courses are included in this price. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video that I talked about already. It's an hour long. We go through everything. We also give you all of that training material you just saw. We trade the SPY and the QQQ, and we swing and day trade. So we do trade quite often in my room. Now, if you are looking for futures trading, individual stocks, income trading, or advanced trading, you want to go to the PT's room. And there you get everything you get in the Invest with Jacob room, as well as futures trading, individual stocks, his income method that's killing the market, and his reduced risk binary method that gets you in at a really cheap price and gets you huge multiples on your money. And it's how he structures those trades that's so unique. Something you really have to see to understand, and that's another reason we give you the 7-day free trial. He also started a challenge account where you put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to put you in these rooms so we can all make money together. Key takeaways for today. We are looking for this resistance to hold, and we are looking for a mild pullback here, nothing crazy, back toward about the 6,000 level or so. Then we would look for continuation towards 6,300. Can they move directly higher? Yes. Is that the most likely scenario? It isn't. But if it is, if they do that, they do that. That it is what it is. There'll be another trade tomorrow. And if they come down in an impulsive wave, we can look for them down to the blue box. I don't think that's very likely either. Over on the NASDAQ, it's the same type of setup. We are looking for a smaller pullback here into the 21.5 to 21.4 area. We would look for that to hold, and then 23,000 plus after that. However, if we do get an impulsive wave to the downside, we would look for 20,400 to the downside. Can they push directly higher through these highs to 23,000? They can. Is that the most likely path? It isn't. I would not be expecting that directly, but if they do, they do. Guys, that is your market update for today. I'll talk to you tomorrow.